Buying your first home can seem like a mountain to climb, especially when it comes to understanding the financial side of things. So where do you even begin? I'm Melissa Bennett from Blue Coast Realty. Today, we're looking at 4 home financing Q&As. Question number 1. What's step 1 to getting financing for a mortgage here in Ontario? Well, I'd kick things off with a mortgage pre-approval letter. Not only will you get laid off the financial land, but also sellers will need to see that you're not just window shopping. Speaking with a high-quality mortgage broker can really be a good call as they play the field, possibly scouting better rates from an array of lenders. Question number 2. What institutions in Ontario offer home financing? Well, Ontario has quite a mix. There's major banks, think of the usual go-tos, TD, RBC, Scotiabank, and the rest of the gang. Credit unions, these guys are member-owned. Personalized services is their forte, but they might have some neat mortgage products designed just for Ontario. Trust companies, they're not as common, but they've got some unique mortgage flavors that might just tickle your fancy. There are a few more, but they typically lend more for commercial real estate, so we'll skip them. Question number 3. Are there varied types of financing routes to take? You bet. Let's peek at the highlights. If you prefer consistency, fixed rate mortgages are your go-to. Your interest rate stays put with this one. If you fancy a gamble, variable mortgages rates are there as well. Here, your rate dances with the market conditions. So potential gains if the market and economy is doing well, but the opposite is true also. Question number 4. What are open and closed mortgages? With open mortgages, you can make extra payments or settle the entire thing without any penalties. Flexibility is its middle name, but you'll have a little bit of a higher interest rate. Closed mortgages, they usually sport lower rates but come with their own set of rules, especially on extra payments. If the amount you pay goes beyond the allowed amount, you'll have to pay prepayment penalties. Why? Because the lender is losing out on interest when you eat into the principal. And there you have it. But remember, this is just the tip of the iceberg. Always buddy up with a financial guru or a mortgage agent for the deep dive, and welcome home to the Blue Coast.